All right, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. Happy New Year. It is 2026, one official trading day in the books. Friday's session was positive mostly, and really a lot of the speculative momentum, sort of beaten up names that maybe sank lower into year end is really what got a little bit of breath and energy kind of rejuvenated into it. But next week's the big week, right? I think that's what's going to set the tone because we have some very important econ data. We're going to talk about that. We're going to talk a lot about some of the names, the setups, the momentum plays that I currently have on and that are highlighted in our momentum model. So we're going to look at that later in the video and generally just talk about some strategy here into the new year. So let's kick it off with our sponsor, IBD. And I want to highlight a special offer they're running on their Market Surge charting software. We'll have links in the description of this video. It's a pretty good sale that they've got going on now to lock in for the full year. So check out the link in the description of this video if you need a new piece of trading software for 2026. Now, our news is light this week. We don't usually talk about delivery numbers or get into the real specific kind of company reports, but Tesla Friday fourth quarter production numbers were out. Most of the headlines were the fact that Tesla saw back-to-back annual declines in delivery numbers, I think, of the vehicles, but it's notable because I do think Tesla will be an important story this year. I'm actually have increasingly gotten bullish on it over the fourth quarter of this past year. And I do think it'll be, sort of a staple or a position that I will trade around for most of this year. So I do have a position here in Tesla. This is the overall trend in our nice little kind of pullback decline as of right now. And it could easily still pull back further into the low 400s. That wouldn't really surprise me. But I do think Tesla will be an interesting story to watch this year. The only other story I'm going to highlight here is President Trump delaying tariff hikes. And this is just really, this game of chicken and mouse that continues to get played here. And, for select industries and stocks and companies, this will be, meaningful. But that was sort of a surprise there we got into the new year. Let's take a look at the numbers for the week. So don't forget now, this is mostly 2025. We also had a holiday closure and then Friday was 2026. But when we look at our performance on the week here, mostly red across the board. Crude oil was the only thing that, in terms of our majors here, that was green, but equities, generally speaking here, were negative, and gold really saw a good, kind of sell off here into year end. If we take a look at the S&P 500 this week, again, you can see this actually includes Monday's session because of the 5 days, but, it's mostly declined, and then we had that little rebound on Friday. VIX still staying at very subdued levels. So we're trading in the mid 14s right now. So there's not too much concern and worry out there. We joked last week that it was, sort of a good time to put on some front month hedges if you are concerned about this market, concerned about the turn of the new year, and volatility is quite cheap right now in that front month. Dollar index is catching a little bit of a bid here as well. Now, generally it's in kind of a lower lows situation or lower highs, but it's getting a little bit of a rally here in the context of that. And the same thing with the 10-year treasury. We are well above 4%, right? We are knocking actually on 4.2, which is 3-month highs for treasury yields. And so this will be a problem if this continues to accelerate here and break out, something to pay attention to as we get into next week. Now, sector performance, energy was the top of the list. This was the bright spot this week. Energy has been kind of a tough spot to be. I was beating the drum on a breakout rotation and a catch-up trade for XLE for really the beginning and middle part of December. I was dead wrong in that call because it just couldn't get that breakout. Crude oil continued to slide lower. So did natural gas, but it was a bright spot. This week, utilities in the second spot and industrials in the third. Consumer discretionary, tech, and financials. Those are hard ones to be at the bottom of the list if you want to see the indexes higher. Now, only one sector is in our bullish state here. So this is just our trend model. This is an indicator that's available for TC2000 and TradingView users, but this is materials, which has been fairly, unapologetically just moving higher here without too much resistance. Now, to be fair, most of the sectors here are in just neutral state, right? And they're kind of coming off bullish. So we really look at these still as kind of a glass half full. If I put my trader hat on, I'm still generally, kind of optimistic on this whole segment here, which is the bulk of market breadth. These are the two that are still negative or newly negative is consumer staples and consumer discretionary. You don't typically see both of those in the bear camp at the same time, but that's what we have right now. 52-week highs and lows. So under the hood, there's really not much to say. Into the year end, it was basically drying up across the board in both of these measurements. So they're not really telling us too much. It basically just says that, there's not a lot of momentum under the hood from a breadth, larger, longer term breadth perspective, right? And so that just keeps me more in sort of a trader mindset. Percentage of stocks above a 20 SMA dropping off here. I got to look at this, might be with some of the delay in data there with New Year, but regardless, kind of coming down. Still was healthy levels, but trailing off. Both of these I just need to look into for the holiday. Let's talk about Bitcoin. Bitcoin, we talked about last week the fact that it could be starting to gear up for a move. As longer term viewers know, that I've been pretty neutral to bearish on Bitcoin now for the past month plus. And that really hasn't changed. Bitcoin to me is in a show me and prove to me mode that you can reverse a trend and sustain a move higher. I do think if you get a move up, just be careful of it. It feels like we're in a little bit of a trap the other side scenario here in Bitcoin. It still feels like there's lots of folks that want to just buy this dip or are comfortable putting on risk. And so for me, it's just less is more. I'm pretty divested in terms of most of the trading systems, and I don't see that changing right now, but you definitely have some good consolidation here that could lead to a short-term breakout if that's what you're trading. Next week is going to be a doozy. So these are the economic events for next week. And so we have ISM manufacturing, so PMI coming out. And then we also have non-farm payrolls, and we have the big jobs report. So this will be, I think this will officially set the tone of the new year, right? This Friday was just a little kind of preview, still not everybody back to the desks yet. It's still technically a holiday week. And with the economic data next week, and then quickly going into Jan OPEX already, we'll really be kind of back in our seats here next week. So pay attention. I've got some vol events and some things that can certainly move markets. Now let's talk about the NASDAQ real quick. This is the picture, and it's pretty lackluster. It's pretty sideways here, right? It's just consolidating. It hasn't gone anywhere now since October. It topped out, hasn't made a directional move. It's been moving sideways. And, again, like I say, we've got some big economic data. We've got the turn of the calendar year. We're going to have President Trump picking the new head of the Fed. And so there's lots of things now that can move this market directionally. We've got some energy stored up. So I do think we're going to have, I don't know if it's next week, but certainly towards the end of next week in mid-January, it feels like we're going to start to want to make a directional move here in the Qs, either direction. And this is what we want to be paying attention to. I think this is the next kind of trade to focus on. Watching the Qs here below 600, above 630. I think those are your goalposts. And that could set us up for, kind of a multi-week trade. Bright spot for the market, semiconductors. Semiconductors, again, it was kind of a day one turn of the calendar, but still semis were trying to break out. In fact, they did clear to new highs here, and that is constructive. Whenever you have semiconductors leading the Qs or SPY or any type of ratio you want to draw on with cyclical semis, That's usually a good thing when you have them out in front leading. So more of this would be good. Next week, we want to see this breakout stick. What you don't want to see is a fast reversal lower, right? That would be bad news. Emerging markets, I posted this chart today. I don't think many of the audience listening here are focused on international stocks, but I think it's worth pointing out EM and international stocks both outperformed the S&P 500 last year, and so far, one day, they're doing the same for 26, something to think about. Solar. So we're going to start to roll into some of really just talking my book, some of the things I own, a lot of the things I own, including solar here. But these are just some good structured charts that I like and I own and I have various duration positions in. I posted this on social. I think we may have talked about it a couple of times as well, but solar has just been acting right, technically behaving exactly like you'd want. We had a nice kind of breakout day here. Next week, we're looking for follow through. We're looking for TAN to go attack the $53 prior highs from November. I like it. I'm long it for a swing. Let's talk about some momentum names. So they were working on Friday, lots of different momentum and the AI trade, data centers, power, all those things that again kind of floated lower into year end now started to work. Various reasons why that could be the case, but we're going to highlight a couple that come from quant rockets. This is our momentum swing model, doing lots of improvements and updates behind the scene to this model. Really want to make this kind of an A+ swing trading momentum service dashboard, really adding lots of color and context to stocks. But Carmen Holdings is one that we got involved in mid-December, and as it was starting to clear above here, kind of put in a little bit of a lower high, and this is working again. And I do like it because it's really sort of form this flag into year end. And again, today, if we can find follow through to lots of these stocks we're going to look at here, they all sort of had this day one get ready type of move. And now we're waiting to see if that follow through can happen. Again, lots of catalysts next week, but I think the structure looks nice. Reddit, I did post this one, I think right when we purchased it. So again, disclosure, I have positions in pretty much everything that we're going to look at here. I own Reddit. We bought it here as it started to break over, this consolidation, chop. Had to really stay with the trade, not get stopped out, not get bored out of it. And we didn't. And that's starting to move now and above 240 follow through. That looks good. SanDisk back on the list here. This was a trade that had a huge winner for us earlier in the 25. But now we got back into it here again as it started to clear up, held up, floated, again, this is that consolidation down into the end of the year. And then take a look at the volume that came in here today and this nice candle kind of pushing us right back up towards those highs. So again, I own it. We like it. Our model likes it. And Talon Energy, I think we highlighted this one a couple of weeks ago as well, but a very similar pattern here, right? You're seeing a lot of these momentum kind of higher beta names start to hold structure, break out, turn up. We get involved and now they're starting to make their secondary move. So this is a pretty good, list and really is emblematic of sort of the way this year started off with lots of other names like this. You could look at the space stocks, which we do have a good, few positions in as well, but lots of those kind of higher beta momentum names were working. So that's it. Next week, I think we're going to be spending a lot of time dissecting how the market acts post the econ data as we get closer to the new Federal Reserve head. And then we will quickly be in earnings season and OPEX. So we're going to have a very quick kind of fast-paced ramp up to this year. So hopefully this was helpful. Hopefully we can keep you on top of all the important movers. Thanks as always for tuning in. 2026 will be a great year, and hope you had a wonderful new year. So that's it for me. We'll see you back here next week. Take care of yourself.